This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all of Bitcoin, all the time. I'm your host, Christie. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index currently trading at $47,876. Bitcoin is sliding down about 1.8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, let's take a look at some of those top stories moving markets. Bitcoin trading little changed after the Bank of England delivered a surprise interest rate hike and the European Central Bank announced an end to the pandemic era asset purchase program. This follows the Federal Reserve's decision yesterday to double tapering efforts to end its $120 billion a month bond buying program by March of next year. Meanwhile, Russia's central bank is looking at a complete ban on future crypto investments. Reuters reporting the central bank is in discussions with market players regarding a possible ban and is working on a ruble-backed central bank digital currency. If approved by lawmakers, the ban would only apply to new purchases of crypto assets, not to past purchases. Finally, India's biggest crypto exchange, WAZIRX, reporting a 17-fold jump in trading volume in 2021. This translates to registered annual trading volume of over $43 billion, with the most popular coins being Bitcoin, Tether, and meme coins. All this despite confusion and lingering regulatory deadlock over crypto laws in the country.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The Federal Reserve's hawkishness and Bitcoin's near 40% correction is doing little to limit Bitcoin adoption as the number of wallet addresses with a non-zero balance continues to break all-time highs, according to UK-based digital asset broker GlobalBlock. Also, since Bitcoin's $69,000 per Bitcoin all-time high, this chart showing Canadian Bitcoin Purpose ETF adding over 6,300 Bitcoins in assets under management, representing an over 26% increase in coin holdings. As institutions are more likely to buy ETFs than retail due to compliance reasons, GlobalBlock saying this suggests institutional interest is prevalent at these prices and that whales are buying up Bitcoin supply during this correction. In addition, this shows how effective a spot ETF is for attracting buyers. GlobalBlock expects new institutional players to continue to enter the space as more spot ETFs become approved, hence helping Bitcoin reach figures of a predicted $500,000 and more. Joining us now to discuss is GlobalBlock CEO Rufus Round. Hello there, Rufus. Okay, so very bullish prediction in the latest GlobalBlock note that Bitcoin will blast beyond $500,000 per Bitcoin when spot ETFs are approved in the United States, I assume. When do you think that'll happen?
Hi, thanks for having me on. Well, timing that is a tricky issue, but we're not the first to have made that call by any stretch. And if you just equate where the gold market cap is, Bitcoin it's quite easy to see gold and Bitcoin having an equivalence of market cap at some point, and that would easily exceed 500,000, especially when you get institutional buying. Now, whether that takes 1 year or 5, I don't know, but I would guess it would happen within the next 5 years at best. It will only take one more crisis to unleash a whole new wave of stimulus that reiterates the need for Bitcoin as an asset class.
Yeah, it's interesting you say that because Michael Saylor, CEO of MicroStrategy, has predicted that Bitcoin will one day hit a 100 trillion market cap, which would make Bitcoin worth about around $5 to $6 million per Bitcoin. Very bullish predictions out there indeed. I wonder though, with the Bank of England raising rates before ending its bond buying purchase program, as well as the ECB cutting back bond buying next March and the Fed doubling its tapering effort to end emergency bond purchasing by next March, and hinting at several hikes next year. I wonder how you believe that will impact the crypto markets.
That's tough to say. Now, I know there is a feeling that rate increases will lead to a risk-off environment, and that will affect cryptocurrencies equally. I think, to be honest, most of the life of the crypto market has been in a very low interest rate environment. So it's very hard to have any historical precedents to make that assumption. But all we can relate to over the last few years is when risk-off appetites, thanks to hawkishness in the bond markets, has led to a brief sell-off in crypto assets. I don't think that's a pervasive correlation for the longer term. I think there are cases for cryptocurrency assets to be held as investments and protocols, and to make our lives easier, whether we get a deflationary or an inflationary environment. So in the long term, we will see some bumps thanks to general risk off, because people like to trade assets that move, and cryptocurrencies move like no other assets that we trade generally. And it brings a lot of action and activity and speculation and commentary like this.
Correct. Well, I wonder what you think about the headwinds we're seeing from various central banks around the world, such as Russia. They have announced, or the Russian central bank is talking about banning future crypto purchases. India is also thinking about potentially banning private cryptocurrencies. Do you think that might have an impact on Bitcoin adoption?
It definitely will have some impact, and not a great impact, not a sort of very beneficial one in the short term. These are negative headlines and no one needs them in the crypto market, that's for sure. But the precedents by China has shown that when they've banned it, Bitcoin tends to sell off a bit, but then it comes back stronger, and it diversifies the holding base to more stable hands in more stable jurisdictions. Let's be honest, we've seen a lot of mining move from China to more open jurisdictions as a result of their ban, and that's a great thing. It's spread the decentralization of Bitcoin much more broadly, and that's very positive for the asset class. So these are political maneuverings that I wouldn't set too much long-term store by. It's only a problem if the world globally bans cryptocurrencies, and I don't think the world can coordinate on anything. They can't coordinate on more important issues like climate change yet, rather than worrying about cryptocurrencies.
All right, down those lines, I wonder, what is your end-of-year outlook for Bitcoin? And maybe you can go over a couple of 2022 predictions.
Well, I said on this show, I think under a week ago, well, not this specific show, but on CoinDesk, that I think 75,000 by year end is doable. It's looking less and less likely with 2 weeks to go. But picking numbers out of the air in timeframes is a double whammy. I've got to get the direction right and the timing right, and that's very difficult. But in 2022, I can make some broader predictions quite happily. So I think the metaverse will expand. Investment into that specific arena of crypto will thrive and almost become exponential as people learn how to link the physical world with the digital world, and we can interact more closely with our physical world with a digital representation of it, and that will lead to greater adoption of NFTs, asset representation by NFTs, linked to places in a map. Maybe it's a real world map. Maybe these will be fictitious places in alternative worlds, gaming worlds. There's so much innovation going on, it's really hard to keep track of. But one thing's for sure, money's going to pour into metaverse projects, NFT projects, and more cryptocurrency protocols. This is not going away.
It's an exciting future ahead of us. All right, I'll see you in 2022, Rufus. Thanks for joining us. Maybe I'll see you in the metaverse. That was GlobalBlock CEO Rufus Round. Coming up, the top trends that will shape Bitcoin mining in 2022.
Hi, I'm Kevin Worth, CEO of CoinDesk, and you're watching CoinDesk TV.
Welcome back. The past year saw one of the biggest shakeups in mining history. Swaths of Chinese miners had to look for new homes due to the most intense regulatory crackdown in the country to date, while an ongoing global chip shortage capped the capacity of new mining machines globally. So what will 2022 behold for Bitcoin mining? Joining us now to discuss is CoinDesk Managing Editor of Technology, Christie Harkin in Toronto. Hello there, Christie. All right, so I certainly could not have predicted the wild events of 2021 for the mining industry, but CoinDesk has conducted a survey to forecast what trends we may see next year. What are the top results?
Well, this was a report that was assembled by Ayon Ashraf and Lisa Gritsky, who are two of our top mining reporters at CoinDesk. And what they did was they took a look at some of the things that have been happening over 2021. And then they spoke to an assortment of movers and shakers in the Bitcoin mining industry to get their take on what they saw as the top things to keep an eye on for 2022. And they came up with 8 pretty good categories, actually. So I like to break them down into 2 aspects. There's the technical aspect of Bitcoin mining and where that will go. And then there's the more financial side of things and the investment side of Bitcoin and Bitcoin mining and where that's going to go. So with the tech aspects, there are a couple of things that I think are really going to be important, and that's what comes up in this report. So we're going to look at the increased hash rate. Now, we saw the hash rate dip dramatically in the beginning of the summer, end of the spring, when we lost a bunch of Chinese Bitcoin miners where we had a good concentration of Bitcoin mining apparatus set up. Now, for anyone who doesn't know what Bitcoin hash rate deals with, it's the measure of computational resources that are used to conduct mining activities that secure the Bitcoin blockchain. And when the hash rate is really high, that means that there are a lot of miners who are all competing to mine the next Bitcoin block and receive the Bitcoin rewards. And the more competition there is, the harder it is to actually win one of those blocks. Now, we lost a bunch of miners. The hash rate fell almost in half, and we've recovered most of that. And a lot of miners are actually anticipating that the hash rate could continue to rise and become almost double what it is right now. So that would be a remarkable accomplishment for Bitcoin to have that much security on the network. The other things that that are very closely related are cheap power, where miners are going to start finding their power sources, and how that's going to affect ESG, which is the energy that we think about when it comes to the environmental impact of what all that mining is going to affect. And miners are already leaning towards securing sustainable power sources. So they're looking at solar and wind and hydropower and nuclear power for their operations. And the Bitcoin Mining Council, which is an industry forum that started up this year to really keep an eye on the Bitcoin energy impact, they're saying, that we're already on the downward slope in terms of the carbon footprint. And by downward, I mean good, as in it's less of a footprint. There's also the supply chain. Are we going to get enough chips and enough materials to build new miners to keep up with the demand? If we're going to have all this new hash power coming online, where is the machinery coming from? Where's the infrastructure coming from? That's going to play a big part of it. There has been a chip shortage, not just for miners, but for things like cell phones and video game systems. And that stress on the supply chain is having an impact on how quickly we can build new mining rigs. And then there's the rigs that are going into reuse. So the ones that shut down in China, are they being reused elsewhere? And of those people who are reusing older technology, are they going to be able to keep up with the competitive hash rate and still remain competitive? And then finally, there will be new technologies. And what we're keeping an eye on is specifically something called immersion liquid cool mining, which takes up less space, has no pressure fans, water curtains or water-cooled fans are needed to achieve a better heat dissipation effect. So you're dealing with something that's more energy efficient and also in some ways space and resource efficiencies. So when we talk about whether or not miners are going to be able to stay online and stay competitive and get their margins big, which they are right now, they were like 90% at one point, huge margins for profit margins for miners. Can they keep that up? And that's where new technology comes into it, because it's always going to be the most efficient technology that is going to win out at the end of the day. So that's the tech side of it.
Very, very comprehensive explanation there, Christie. Also, I also saw in there, you mentioned margin compression. So slower, I guess it'll be harder to compete for fees is what I'm getting. A rise in M&A activity. We do see a lot of miners buying up, the winners will
equipment. The winners will keep up. Yeah. And those that can't keep up could get swallowed up.
Yeah, as well as fast money versus value investors. I wasn't sure, about that one.
So right now, investors are using Bitcoin miners as proxy investments for Bitcoin. So instead of investing in Bitcoin, the asset, they're investing in mining companies as a way of getting some sort of exposure to the Bitcoin industry. Now, the thing is, some institutions are becoming more experienced with Bitcoin. They're getting a little more comfortable with it. And it may change how they invest in mining, according to Griffin's CEO. And they're noticing that they're focusing on the things institutional investors traditionally place a lot of emphasis on, which is more the standard things like quality management, experienced execution, and companies that act like blue chip organizations as opposed to stock promoters. And when you look at especially M&A, if you're going to have a company that is out there aggressively acquiring the assets of other less profitable companies in order to grow their market share, that can improve their own company efficiencies and the profit margins. So people are starting to look at the industry as an investment that is maturing, as opposed to something that's like a little side project or still too experimental to take seriously.
All right. Well, thank you, Christie. The full article is on CoinDesk.com, Trends for 2022 in the Mining Industry. That was CoinDesk Managing Editor of Technology, Christie Harkin. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 o'clock in New York, as well as join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.